So in today's live stream, we're going to start by talking about US dollar. Thank you so much, Peter Mosey, for your confirmation. So we're going to start by looking at the US dollar key levels I'm watching. As you can see, I talked about this low on 4-hour time frame, created this high. Let's not forget what price mitigated. We mitigated the gap, and after that mitigation, what I'm looking forward to see was for a continuation to the downside potentially, because the 12-month time frame we're still within the range high and range low, which is bearish. So if we're bearish, this would be a perfect area to see a rejection and a continuation to the downside. So that being said, also take note of this inefficiency I talked about yesterday. And this inefficiency, if we're bullish, then this would be a perfect area to see a rejection, potential continuation to the upside to run the buy side liquidity. But if we're bullish, this would be a perfect area to see a rejection and a continuation to the upside. And if we are bearish, this key level right here would be a perfect key level for us to anticipate a rejection and a continuation to the downside. So in as much as I personally prefer the market to go to the downside, it's also not a certainty for that to happen. Now that being said, if we go to the 1-hour time frame, we can see price created a low, created a high, and we broke structure right here. And after that structure break, this was the last impulse move to the upside before it dropped down. So I was anticipating for price to come in here, either mitigate the inefficiency, borders of the candle, or a run on buy side liquidity. And as you can see, price preferred to run the buy side liquidity because we have an inefficiency resting right here, and also this low resistance liquidity resting right here as well. Price came into that key level, and then we saw this heavy rejection. So this rejection right here, if I was to look for sales, what I would like to see would be a 5 minutes break of structure in this key level. And as you can see, we created a low, created a high. Price took this low, but it didn't close below it. We saw this impulse drop down, eventually breaking and closing below that low. So right here would be my most preferred entry into the market for sales. So you can see right there, but for some reason price didn't mitigate it, and then we saw this drop to the downside. So now after this drop to the downside, if we're bearish, I wouldn't be surprised to see price come to the upside potentially, either to run this buy side liquidity resting right here, because I presume this high was created 2 hours ago, and 2 hours ago that was the current time is 9, so 2 hours ago is 7 a.m. So this high right here was created by 7 a.m. So I wouldn't be surprised if price wants to come back for a run on this buy side liquidity before a potential continuation to the downside if we're bearish. So that is what I'm going to be anticipating to see on the US dollar. If we're bearish, I wouldn't be surprised to see a continuation to the downside after a run on liquidity. So that is what I'm watching on US dollar. Hopefully that plays out and we can make some nice profit today being Friday, the last day of the week. Now looking at Euro US dollar, I've always stated my analysis to be bullish on US dollar, on Euro US dollar, because we've consistently been creating higher highs and higher low, a higher high and a higher low and a higher high. So right here, I presume this is going to be a low and then potential continuation to the upside. So if we go to the 3-month time frame to see what price is doing, don't forget this red line is our 12-month close. And if I want to buy, I want to buy below that close. Now, right here on the 3-month time frame, there isn't really so much information to work with. If we clear our chart, we can see price came to the downside, took a liquidity from this low, and after a run on liquidity, we saw this impulse move to upside. So we look at monthly time frame, and on the monthly time frame, we left this inefficiency, mitigated it, expanded to the upside, then rejected, came back down. So this right here, this is the last candle on the top on the monthly time frame that went to the downside to run liquidity. If I clear my chart so you can see that clearly, you can see the liquidity, and you can see this was the last candle to the downside, took liquidity before this expansion. So if I want to buy, I want to buy in this candle. We go to the weekly time frame to see what it looks like. There's not really much to work with. Price came to the downside, took liquidity. Looking at this, you can see we created a low, created a high, drop down, breaking this structure. So if we are bearish, you can see this would have been a retest and then potential continuation to the downside. So I still wouldn't be surprised if price continues to the downside to run this sell side liquidity. I will absolutely not be surprised because of this low, high, and break. And then this mitigation right here at extreme level, inefficiency, run on liquidity, and then it dropped to the downside. So I wouldn't be surprised if price wants to continue to the downside. But the reason why I'm bullish is because the 12-month time frame is telling me that we're bullish. And I'm focusing on the overall market direction being the 12-month time frame. So if the 12-month time frame is saying bullishness, my focus is bullishness. And in as much as selling, you can make profit, you can make a lot of profit. Anyone who has been selling this would have been making a lot of profit. This trade right here, this trade idea would have yielded at least 1:15. This one I saw would have yielded at least 1:10 or 1:8. So they've made a lot of profit. But if price should reject from this key level to rally to the upside, the minimum you're gonna make is 1:20 to 1:30 or more. That is the minimum you're gonna make from that trade. So what does that tell you? Eventually, someone who's been taking losses trying to buy this, they eventually get in on the good buy, being consistent with looking for that buy setup, and they catch that buy setup, they're gonna make more money than someone who has been selling this. Because if you've been selling this, you probably would have made maybe 1:15 on this one, 1:10 on this one, that's 1:25. And someone buying it here to run this buy stops, that could literally make them 1:30, 1:35 or more. Because if you look at from here to this overall high, that's a 1:45, which is literally 2x whatever anybody who was selling this has made so far. But now, as a trader, you can try to buy and sell. Price comes to your point of interest, you buy, comes to your point of interest, you sell. And if we look at the extreme levels, this is our overall weekly high, our overall weekly low. You can basically see that price came to an extreme discount level. So if we want to buy, we want to buy at an extreme discount level. You can basically see how price came to this extreme premium level, and after that we saw rejection, tapped the extreme discount, rejected, and then came back into the extreme discount level. So personally, I'm still bullish on Euro US dollar, and I'm looking for buys. I've already set my buy limit orders on Euro US dollar. And right here, we'll have this inefficiency right here. This is my point of interest, and all I wanted to see was a 30 minutes break of structure after mitigating that position. And if we go to the 30 minutes time frame, you can see very clearly after we mitigated the green box, we created an overall high on the 30 minutes time frame, created an overall low as well. And after that, we saw this break of structure. And we did an analysis looking at the line chart from the 4-hour time frame. You can do that again. And on the line chart, you can see this is a high, a low, and this was a break of structure. And this right here is the entire down close candles before an expansion of broke structure. So this is our key level where we want to see price retest, and then we want to see a 5 minutes, 4 minutes break of structure. Then we look for entries into the market. So if we scale down to 5 minutes, we can see how nicely. If we scale down to 30 minutes, you can see the red box that I outlined yesterday. And I said if I'm bullish, I want to see price mitigate this position, run this liquidity, because we also looked at this on the line chart. And on the line chart, I was talking about this low being a low resistance liquidity on the line chart. But if you go to the bar chart, you can see that it is a high resistance liquidity. So I said yesterday that I wouldn't be surprised to see a run below this low. And look how nicely price took that liquidity, ran below it, took the stop losses resting below this position. All the traders that have been buying it above this key level using this position as a stop loss because it's a high resistance liquidity, because they weren't paying attention to the line chart. It's very essential to pay attention to the line chart because it shows you things that the bar chart is not going to show you. And the reason for that is because it's focusing on the bodies of the candle. It's very essential to focus on the bodies of the candle rather than the wicks, because brokers can manipulate the wick to be higher or lower. And if the wick is higher in this broker, it could be lower in another broker. Now, which of the information are you going to be working with? That is why it's very essential to focus on the bodies of the candle. Where is the bodies of the candle? Now, if we're looking at this, you can see that this right here is a high resistance liquidity because the bodies of the candle say so. because we created a low and price came to the downside, took that liquidity resting right here, and then expanded higher. That means this is a solid area to place my stop loss. And look how nicely, even though we went to the upside and price came back down, coming back down, we still didn't take this lows. So that means if your stop loss was here, it's safe. Another one to look at, you can see we created a low, we rallied, came to the downside, took this liquidity. This right here is a high resistance liquidity. So if your stop loss was resting right here, it's going to be safe, because look what happened. Even though we came to the downside, it didn't run through this low, because this low is a high resistance liquidity. So this is basically one of the ways you can use the line chart. Is going to help you a lot. You can see that if your stop loss was here and you were on a buy, you wouldn't have been taken out of that trade. But look at someone who plays the stop loss right here, because on the bar chart, it looks like here is a high resistance liquidity, but on the line chart, it's telling you this is low resistance. And if that person put their stop loss right here, this is what would have happened to them. Violation. Price would have taken the stop losses, wiped them out clean, and then still going towards their buy direction. So this is one thing to also put into perspective. You can look at the bar chart, use it to understand the bodies of the candle. If you don't want to use like this bars to really see, or this bars is to see the open and close, and then this one is to see the bodies of the candle clearly. And you can still see the bodies of the candle right here. You can still see them right here, but using this one, it really makes it so easy to see and very simple. So you can see how price created this relative equal lows, and they came down to take it out. Looking at the bodies of the candle, the line chart, it's really clear. You can see clear as day. So that being said, next thing we'll do now, we're going to go to the 5 minutes time frame, because we wanted to see a 5 minutes break structure. And now looking at the 5 minutes break structure, where do you think we're going to anticipating to get an entry? Right here, the bodies of the candle created a high, created a low, and this is the break of structure, and this was the last down close candles before an expansion that broke structure. So if we want to buy, we want to buy from this key level, anything above this key level is going to be our buy zone. I'll make it a different color so we can see what I'm talking about very clearly. So which color? So I'll make it orange. So if we want to get into a buy position on Euro US dollar, our buys is going to be above this orange line. Why is it above this orange line and not on this orange line? The reason for that is slippage. Right now, if you place your entry exactly on this orange line, there isn't a certainty that you're going to get kicked into that trade. Price is going to mitigate this orange line. I'm literally 80% short of that. If we're bullish, I wouldn't be surprised to see price mitigate this orange line. But if it mitigates this orange line, there isn't a certainty you're going to get kicked into the trade, because it might just tap it one pip and reject off it and then start going to the upside. So that is why you can see my entry position is right here, my first entry. My second entry is right here. The reason I'm using these key levels is just for slippage, because I don't want to miss out on this trade. If this trade plays out, we could literally make a 1:20 minimum to a 1:30 or more on this trade setup. And the reason for that is because we're trying to trade the overall market direction, being bullishness on the 12-month time frame. And even if this trade doesn't work, all I'm going to do is I'm still going to scale down and reanalyze and look out for key levels, prices potentially hunting to get to for a reversal, and then I'm still going to look for a buy again. And if it doesn't work, I'm still going to reanalyze, look for key levels, prices coming to, and I'm still going to look for a buy again. The reason is because I'm trading with the overall market direction, which is the 12-month time frame, showing me that we are bullish. That is the reason why, no matter what is happening in the market, I still look at what other traders are doing, what they're saying. I still look at it to understand what are other retail traders looking out for. And literally every single one of them is looking for sells. Literally 80% of the traders that I've looked through the stuff this week, they are all looking for Euro US dollar to continue to the downside. Some say they are looking for Euro US dollar to go to parity, and parity simply means Euro US dollar going to 1.00 new lows. That's what it means. So 1.00 is Euro US dollar going to levels like this. So this is where most traders are anticipating for Euro US dollar to go to parity A lot of them said is 1.000. So that is right here. So this right here is where most traders are anticipating for Euro US dollar to get to, which is 100% possible to happen. But personally, I'm not believing that it's going to happen. My intention is to look for buys for this to continue higher. And it doesn't mean because I'm wrong or because I'm more intelligent or I'm a better trader than the other traders. It simply means that is what my analysis is showing me. And if my analysis is showing me that we're bullish on Euro US dollar, and I should focus on bullishness. It doesn't really matter what other traders are doing. The only reason I look at what they're doing is because I want to have a better perspective of what other traders are looking out for. Because at the end of the day, it's either going to be me or them. It's going to be liquidity. That's just how trading works. It's either going to be one of us. It's going to be the liquidity in the market. So it's either the people buying are going to be the liquidity or the people selling are going to be the liquidity. So which one of them do you want to be? Do you want to be the liquidity or do you want to be the one making money? At the end of the day, if I'm looking at this from the bigger time frame perspective, from the 12-month time frame perspective, I think the liquidity is resting at the upside. I don't really see much liquidity resting at the downside. Yes, every low, every high is liquidity. Every single low, every single high is liquidity. But if I'm looking at this and I'm looking for where is the low resistance liquidity and where is the high resistance liquidity, I'm going to look at this plain and simple. If you've understood what it means for any area to be a high resistance or low resistance liquidity, looking at this key level from this low to this high, or from even this low to this high, where is the low resistance liquidity? Where is the high resistance liquidity? I'm going to show that to you very simple. We look like right here, you can see this low. You can see how price came to the downside and took that liquidity. Here becomes a high resistance liquidity. Look right here. You can see there wasn't a run on liquidity before it dropped. Here becomes a low resistance liquidity. Look what happened to the low resistance and the high resistance liquidity. The high resistance liquidity, after price took that liquidity, it stayed sustained. And look what happened to the low resistance liquidity. We rallied above it and we took that liquidity out. That is what happened to it. Now look again, current price action. Price took this liquidity. We have a high resistance liquidity. What do you see right here? Low resistance liquidity. What do you see right here? Low resistance liquidity. So I don't even need to see what any other person is doing or saying. My interest still continues for price to go to the upside to run the buy side liquidity. So that is what I'm looking forward to seeing in the marketplace. And if you do have any questions based off my analysis, feel free to drop it in the chat and I'm going to be there to answer all your queries. So another one we're gonna look at GBP US dollar, what GBP US dollar is doing so far. So for GBP US dollar, it has quite a very weird price action, which is the reason why I do not like trading this pair. In as much as I wanted to see price mitigate this position and continue higher, but the price action is just not something I like to put my money in, not because it won't play out, but because I just don't like how GBP US dollar moves. It's just not the kind of pair that I like to trade, but I still remain bullish on GBP US dollar. And one of the reasons is because of the overall direction of the market, what I'm anticipating to see. I'll just wipe everything on my chart. So what I'm looking at on GBP US dollar, I'm looking at high resistance, low resistance liquidity, and right here, so you can see we took liquidity, creating a high resistance liquidity right here. So I wouldn't be surprised to see a continuation to the upside, potentially to mitigate these extreme levels because we have inefficiencies resting right here. So that is what I'm looking forward to see on GBP US dollar. I don't really like trading this pair because it's very, very manipulated, and I just try as much as possible to stay away from it. But at the same time, Sometimes it shows really good trades, and if you're someone that you like trading this pair, you can just watch my models and back test it. You'll see it does play out, really deliver good trades. And where we are right now on GBP US dollar, it can still be a very beautiful area to look for buys for it to continue to the upside. But personally, I'm not putting my money on GBP US dollar. So we'll look at USD card as well. So for USD card, I talked about this key level on the weekly. We can see we created a lower high broke structure right there. So I was anticipating for price to mitigate this position. And after that mitigation, I was watching the 30-minute time frame break of structure. We created a low, a high, eventually broke structure. This was the last impulse before breaking the structure. Price came into it. I want to see a 5 minutes or a 4 minutes break of structure. Created a low, created a high, and then we eventually broke structure right here, so you can see. So this was the last impulse before dropping to break structure. So that's going to be my key level, my point of interest. I'm working from the bodies of the candle. Price mitigated the bodies of the candle. After that mitigation right there, I would like to see a 2 minutes break of structure, and we have a low, a high, a low, and then mitigation and drop. So I wouldn't really be surprised to see USD card to potentially come back into this zone before bearish. I wouldn't be surprised to see it come back here and then potentially continue lower. So I'm still very bearish on USD card, in as much as I don't like how price came very close to the extreme levels before breaking that structure. I really don't like that. And that is why I'm just staying on the sidelines for USD card. I'm not going to trade it for now. I will just watch to see a significant 4-hour break of structure. And when I see that, then in the future, I'll be looking for sales, a continuation sales, to potentially run this low resistance liquidity right on the downside. So that is my analysis on USD card. I'll look at Bitcoin really briefly, so my time is up. So for Bitcoin, don't forget that in the next one day, we're gonna have the Bitcoin halving. So as you can see, Bitcoin halving in 1 day. So it's not even up to 1 day anymore. In 14 hours, we're gonna have the Bitcoin halving in 14 hours. So get ready to see the unimaginable in crypto. So it's either gonna be to the upside or to the downside. But that's crypto for you. Anything is possible. Personally, I favor price going to the upside. I want to see higher prices on Bitcoin, and I wouldn't be surprised to see $100,000 Bitcoin. My target on Bitcoin is 140,000. You had it here first, 140,000 per Bitcoin. That is what I'm expecting to see on Bitcoin moving forward after the halving. And the downside potential, if we are to go to the downside on Bitcoin, my downside target is going to be $59,000. So if we do run this $59,000 low, then I wouldn't be surprised to see the potential move to the upside on Bitcoin. And my highest target is 140,000 for this new bull run. That's my highest target. So we're just going to be watching that closely to see what the market is going to do eventually. So right here is 140,000. That's my overall target. And judging from the previous price actions, previous halvings, you can basically see that each time after the halving, we saw an expansion. After the halving, expansion. And then the halving is literally in the next 14 hours. I wouldn't be surprised to see an expansion at least to 140,000. So that is my analysis on Bitcoin. If you find that insightful, you can also drop your questions in on the chat, and I'll be there to answer every single one of you. I appreciate you all for tuning in. My apologies for coming in on the live stream 5 minutes late. We had a meeting this morning. That was what basically delayed me. But hopefully our trade idea on Euro US dollar, hopefully it does play out and we can all make some profit today. So I appreciate you all, and I'll talk to you all in the next live stream. Have an amazing day, everyone.